they could possibly issue another Sukuk bond later in the future. So what we've observed is that there's a class of investors, ethical investors, who are interested in such instruments, and we think there will be moderate subscription for this particular Sukuk bond issuance. So if the government is leveraging on the success it experienced at the last issuance to also come up with this issuance, and like you said, the funds are targeted to be geared towards the development of infrastructural projects, basically roads, across 6 geopolitical zones. And the vehicle for this investment is the FGN Road Sukuk Company. Like you said, it's a Sukuk bond, so it's not an interest-bearing security in theory. It has a rental rate of 15.74% at this time. The last Sukuk bond that was issued, that's the previous year, had a rental rate of around 16.47%. So we mostly see that the federal government benchmarks the Sukuk rental rate to the interest rate on similar securities in the secondary market. So you have the FGN 2026 bond, which is the on-the-run bond. The 2025 bond, which should have been benchmarked to this, is not on the run, so it's not actively traded in the market. But the 2026 bond, which is the on-the-run bond, was offered at 15.71% on Friday. So that shows you why the government was able to mark the rental rate on this particular one to 15.74%. So with this, the federal government has more or less been congratulated on its success at the last one, and I believe they'll be looking forward to decent subscriptions at this particular auction.
What are investors telling you about the initial one, the inaugural version of it, and now that this one is coming out, are they satisfied with what the proceeds for the previous one has been used for in terms of road construction? So,
you know, in Nigeria, most times when we have, we're told what funds will be used for, but at the end of the day, we may not be put up to date on what they are being used for at per time. But what we know investors are looking at is the credibility. The federal government would not default on their obligations with regards to the Sukuk bond. It is backed by the full faith and credit of the federal government. So irrespective of what the funds are going to be used for, how effectively they are being utilized, investors are assured that at the right time, they'll get their coupon payments, and upon maturity, their principal invested will be redeemed.
So a lot of investors or a lot of Nigerians have been asking, how do we invest in this? Is this for corporates alone, or retail investors can also participate?
It's for all classes of investors. In fact, the DMO is largely targeting the retail investors, those who are faith-based and averse to interest-bearing securities. It's to accommodate all classes of investors, regardless of what your underlying interests are, particularly. So some class of investors may not be attracted to other fixed income instruments offered by the federal government, but if they can key into the Sukuk bond program, then it also gives them the opportunity to be part of the funding of the federal government's infrastructural objectives.
I know a lot of time investors are less concerned about what the federal government uses the proceeds for eventually. They are more interested in how they get their money back. But you know that crude oil price has now been reducing, tailspin and seriously. And even though we know that OPEC was considering Nigeria, you know, also reducing its output, but then we got a reaction from our Minister of State for Petroleum. At the end of the day, do you think we'll still have the capacity to service these debts?
Okay, so the DMO at the recently did a debt sustainability analysis for Nigeria, which it does, I think, every 5 years, to look critically at what the current debt situation is and the capacity of the country to meet up with its debt obligations. So we are currently at a moderate risk of debt default, which is slightly acceptable. There are stress signs. There are stress signs for us. The federal government's debt is growing. Eurobonds of about above $5 billion have been issued this year alone, and the federal government is still ramping up its borrowings to be able to meet up with its infrastructural deficits. You can't blame the federal government because they will have to generate sources. They will have to generate sources of funds to finance the budget. And in a case where oil revenues, which are the principal or mainstay of the economy, begins to decline or dwindle, government is under pressure because we've not been able to effectively diversify our non-oil revenue sources. Despite a lot of talks on that, we're still not where we're supposed to be yet in that regard. So oil revenue is still the largest part of what we need to service our obligations, both for capital development, for debt service, and for recurrent expenditures. And now the oil price situation is very tricky. Nigeria's gross domestic productivity over the years has been seen to more or less oscillate with the level of oil prices in the global market. And we've not yet been able to draw ourselves from that conundrum of oil price shocks in global economies. So at some point earlier, some months ago, a month or 2 months ago, oil prices really rebounded to year highs of
$80.
as high as $86.74, the Brent crude price. And some analysts were even of the opinion that oil price could get to as high as $100. But with a lot of global sentiments, we have estimates of there to be weak demand and weaker global growth in the coming year. And you're seeing sentiments around the U.S. is going to be increasing its supply of oil into the market, and some other producers are also ramping up supplies. We've seen pressure on oil prices. So that remains a very tricky situation for us, and it's something we should really look into.
So basically, it leaves us in a negative situation as things are. We might just have to continue to borrow to pay and borrow to pay and borrow to survive.
So I'm not particularly negative, but in a very stressful situation where you are prone to oil price shocks, global externalities. So ordinarily, when we don't have the resistance to what's happening in the global economy. So when China and US are engaged in a confrontation, you are affected because it's affecting global commodity prices. And because we do not have a robust domestic economy, we are exposed to those shocks. And Nigeria does not refine its oil at this point in time. We are still largely dependent on crude oil, refined oil imports. So you don't benefit from falling oil prices. And even when there's an increase in oil prices, you still buy crude oil expensively.
So basically, we just don't have the necessary buffers that we need yet.
Exactly.
Well, that is very, very, is a big source of concern. Anyways, you're still very much around. We'll continue our discussion on the bonds and, of course, the Sukuk now. When we come back from the break, stick around. Don't go away.